What's up YouTube, it's Sank here and I make videos on the stock market, guys. Today I'm coming at you with some hot stocks that you guys should be investing in next week. Now I know it's the weekend, but you know we never ever take our eye off the ball over here. We've got to get ready and prepped for Monday because there's a lot of opportunity in the stock market and I don't want any of us to miss out. Before I tell you those stocks, please check out that link down below. That's Trading 212. Go and grab yourself a free share of stock worth up to $100. I actually had someone who used it and got a free share of stock of NIO a while back, which I thought was pretty cool. Okay, right, so firstly we have to pay homage to a play that I put you guys in last week. They did very well. That's the streaming company Roku. So up on screen you can see up 12% on the week, guys. This is fantastic considering a lot of our EV plays are either flat or down on the week. This is why I'm presenting you guys gems in the stock market to boost your portfolio's returns. And guys, I'm in these plays with you. So as you can see, I own 4.57 shares, right? Up 15%. The reason why I'm up more than the 11.69% that you could see where the actual stock is because I bought in at the dip. That's the power of buying in at the dip, guys. You maximize your portfolio's returns. On the road to 100k is my YouTube growth portfolio, currently standing at £42,000, which is just over $50,000. Guys, for full transparency, I come on here each and every day to show you guys the portfolio and the plays that I'm jumping in, like Roku, so we can get your portfolios from $1,000 to $2,000, then from 10 to 50, and then eventually we're going to get that portfolio of yours from 50,000 to 100,000, guys. And we're going to do that by jumping into a couple of plays next week. The first one is CrowdStrike. So if you don't know CrowdStrike, they're a cyber security company, right? They sell these software packages to corporations to help them with their cyber threat intelligence endeavors. Now, I'm going to give you two stocks in this cyber security, internet security market, because this is a fantastic place to diversify your portfolios and get really, really good gains. But also, we're going to review our portfolio because there is a stock in there that is worth buying into, right? Because they've dropped a little bit and that's Switchback Energy, but more on that later. So there's several things I like about CrowdStrike and the whole cyber security and internet security market, right? And one of those is that they have a reoccurring revenue business model. So what they do is they lock their customers in, they lock their clients in for a period of time, be it 6 months, 1 year, 2 years, 3 years. This is really, really powerful for their business, right? Because they have predictable cash flows, right? And they're not always constantly going out to market for business. Now, the cybersecurity market is set to grow by about 12% constant annual growth rate between 2020 and 2027, driven by e-commerce, the Internet of Things, and artificial intelligence. Guys, I love buying into companies that are in growing sectors, right? Because you're not buying a company for where it is today, you're buying a company for where it's going to be in a year's time, 2 years time, 5 years time, depending on your investment horizon. So this is really, really good news for us who are going to be buying into CrowdStrike come next week, right? Now, let's jump into their Q3. Now, CrowdStrike really did deliver the goods in their Q3. There's a lot of things I can go into, but let me just pick out the highlights, right? Revenue grew 86%. Guys, this is a very fast growing business. The annual recurring revenue was up 81%. Now, that shows that most of their revenue is actually coming from recurring sources. This is fantastic. On their gross margin, 77% compared to 74% now. You guys know that I love seeing businesses that are improving profitability. This is really, really good. Now, their net income loss reduced to 25 million from 35 million. So these are all really, really good signs. And then a nice tip on the iceberg, guys, their cash flow, net cash generated from operations, 88 million compared to 38 million the year before. Now, they have more cash on deck, right? They're growing faster. They're improving their profitability. This is all really, really good signs for us as investors. Now, they also acquired a business called Preempt Security. Now, when a business is making acquisitions, it means that these guys they mean business and they're looking to grow and expand, right? Into different verticals, different sectors, capture different markets. And CrowdStrike are really ticking all the boxes for me right now. So up on screen, we have the CrowdStrike share price graph. Now, in terms of the entry point that I want us to be jumping in at, anything below 170 is pretty good for CrowdStrike. Now, in recent times, it's had a little bit of volatility, as you can see here. down 13%, and here down again about 16-17%. I don't expect CrowdStrike to drop down to 150 levels, but if we can get in at 170, it's just going to help our returns, right? So we know that there's a little bit of price fluctuation. They've just released their Q3 numbers, right? So if we can jump in at 170, that is a steal. Now, in terms of where I see CrowdStrike going, guys, I see this stock going to anywhere 225 to 245 by next year, right? So, and then past next year, I do see this climbing up, right? This is a fantastic business, right? Really helped by that reoccurring revenue model. It makes its revenue, its cash flows really, really sticky. And this is amazing for us investors. The second company I want us to load up on next week is Okta. Again, this is a fantastic play. They do identity and security software for companies, right? And this is highly demanded. Again, they have very, very sticky revenues through their reoccurring revenue business model. Now, there's a few things that I like about their Q3. They grew their revenues 42%, right? Well ahead of estimates. This is amazing. But what I do really like is they have their remaining performance obligations, and this is essentially their backlog of orders, and this grew 53%, right, to 1.5 billion. Now their backlog of orders grew 53% while their revenue grew 42%. Guys, this is a bullish sign for their future, right? Their pipeline is growing much, much faster. So I like this play. Now, there's a couple other things worth noting about Okta, right? In terms of the clients that they're getting, they're making headwinds into getting financial services companies. And this is amazing because financial services companies are often slow to adopt cloud and software, right? So this is really good. They signed up Canadian Western Bank, and this is just the first of many, guys. All right, guys, so check this out. Up on screen is the analyst forecast for the next 12 months for Okta. The lowest is $250, the highest is $300. Now, I actually think Okta can surpass $300 and probably get to about $325 on good client wins and good earnings. But what interests me isn't the high point here, it's actually the low point. The low point is 250. The lowest, the most bearish analyst is 250, but the current share price is 252. So what this is signaling to me is that there's not too much downside by investing into Okta, and there's a lot of upside, right? So I'm pretty positive on this going forward. Now, in terms of an entry point, I would say anything below 250 is a good bet. And you just hold, you buy, you hold, and you wait, and it should rise. They're going to have good client wins. They're breaking into financial services now, as I said. Federal government is another one on their list, and they should be making headwinds through 2021. Up on screen is Switchback Energy. This is a play that's very familiar to us, and a lot of us are in it together. Now, they were down about 10% on Friday. They're getting to a very strong buy point for me ahead of their merger, right? If we can get into Switchback Energy at 36 or below, this is a very good entry point, right? Because when that merger announces and it's closed, guys, that share price is going to skyrocket, and Switchback Energy are doing fantastic things. Remember, this is a company that currently does about 140 million in revenue. By 2026, forecasted about 2 billion, right? This is the leader in the charging stations segment, right? This is a fantastic EV infrastructure player, and they're only going onwards and upwards. So if you can get into Switchback Energy at $36 or below, this is an amazing steal, right? So keep this one on your radar for next week. If you've been rocking with the channel for a while now, you know what time of the day it is. It's question of the day time, and this comes from Daniel. Daniel wants to know, what do you think about FANG? Any good place to start a position? Thank you very much for sending in this question, guys. If you have any questions, comments, do leave them down below. I'm replying and answering to everything. It's so amazing to hear from all of you guys. Now, first things first, if you don't know what FANG is, this is Facebook, Amazon, Apple, Netflix, and Google, right? These are some amazing plays, and a lot of people have slept on these plays while investing into the EV companies. Now, the EV companies are fantastic, but there is still a lot of potential and growth in these companies, and it's on the way. So this is too short a video to answer, to go through each of the FANG stocks, but I'm going to pick out Apple, right? Because Apple's in the top 5 of my holdings, and this is a fantastic play, and it's set for takeoff. So let me show you why, right? So up on screen, we have the Apple share price graph. As you can see from the dip in March, big, massive run up, right? All the way up to about, $135. And then this dropped off and in September, and it's doing this consolidation thing, right? Remember, guys, I said I'm teaching you charts every single day. today is consolidation, right? Yesterday was support lines, today's consolidation. Consolidation is essentially when a stock is just trading in this narrow channel. It's not breaking this resistance and it's not dropping below the support lines. So as you can see, clearly there's a resistance line here of about 125 that Apple is struggling to pass. And there's a support line, but the support line is getting narrower and narrower, right? So the support line is about 105. So it's not dropping below 105 and it's not breaking through 125. So it's just consolidating in that channel. What I like about this is you can clearly see there's an upwards trend in its consolidation pattern, right? You can see the support line is getting higher and higher and higher, right? And it's going to break through that 125 pretty soon. Now, if you don't know, Apple actually have their Apple One. This is a subscription package with all of their good bits in one, right? Now, this is really going to add an increase to Apple's revenue and their growth and their future, right? This is a big thing for Apple. And as soon as we have an announcement about, how Apple One is doing, the uptake, the numbers that have come from the subscription service, Apple's going to break for its 125. So, and also, if we switch over to NIO are actually going for a consolidation phase as well. So you can see this. NIO had that big run up that you just saw with Apple. And now in this circle, you can see they're consolidating, right? So they're in that channel. And, I mentioned before, NIO has a support line around 40. They have a resistance line around 45, 46 at the moment. And they are going to break that. It's just a matter of time. So that brings us to the end of the video. Please hit a like. It really, really helps the channel out. Now, if you're new, do hit that subscribe button. I'm bringing you guys some fantastic content. And I'm bringing you chart analysis each and every day to up your game. Now, as we approach the end of the weekend, I'm going to be prepping you guys to dominate next week. As I always say, do check into the channel daily. The stock market is rapidly moving and you never ever want to miss a beat. So guys, till next time.